Hello and welcome to Business Arena on TVP World. I'm your host, Marie Cato. Let's go to the latest business headlines of the day. The Polish Parliament has passed what could be a significant change to the national calendar. Christmas Eve will now officially be a public holiday. The move comes after a heated debate and in spite of disapproval from the Ministry of Finance. In a vote held on Wednesday, the Parliament declared Christmas Eve a non-working day. This move, supported by a majority in Parliament, means Poles will have an additional public holiday starting in 2025, bringing the total to 14 days annually. The legislation is expected to benefit workers and families, giving them more time to prepare for and celebrate the holiday season. Employers' associations and the Ministry of Finance have expressed concerns about potential economic impacts of the change, citing increased labor costs and disruptions to business operations during the peak shopping period. However, proponents argue that the benefits to the work-life balance outweigh the challenges. The bill now awaits approval from the Senate and President Andrzej Duda to become law. Preliminary GDP data for the third quarter was published by Statistics Poland today. The results are underwhelming, but markets are optimistic about the future.
The second reading is out. Poland's GDP grew in the third quarter by 2.7% year-on-year, the same as in the flash estimate published earlier. What's behind these results?
It's not a surprise at all. First of all, what we saw this morning is very weak private consumption.
Household consumption grew by only 0.3% in annual terms, way below expectations. Another disappointment in Q3 was a very flat rate of investment of just 0.1%, and that's both private and public. This weak result starts to look bright, however, if we put it into context of the rest of the EU, and especially Poland's largest trading partner, Germany, which experienced negative growth in the third quarter, and whose results have certainly affected Polish exports.
Exports declined somewhat in the third quarter, and it basically reflects the situation abroad.
On the upside, Poland has seen a 3.2% rise in inventories, which could be interpreted as future sales. And it's seeing increased public expenditure, which includes defense, an area that's received a significant amount of additional funding from the Polish government.
I think public expenditure had been expected to be substantial, not only in the third quarter, but also in the quarters to come.
Recent positive surprises in retail sales and industrial production have brought more optimism about 2024's year-end results, with market consensus remaining somewhere just above 3%. Going into 2025, however, we'll see much more upside as EU funds from the recovery facility begin to flow in.
We think that EU-led projects will drive both public and private consumption significantly higher in 2025.
With monetary easing expected in March, the market consensus for growth in 2025 is just under 4%.
And if you've been with us on Business Arena for the past few months, you'll know that the Central and Eastern European region has experienced a bit of an iffy time. To some degree, it has affected Poland too. Forecasts over 2024 had been rather good, but the numbers coming off the production line haven't necessarily delivered. To find out what has changed and why, stay with us for the bottom line. The Russian ruble is experiencing wild swings in value, crossing thresholds not seen since the start of the full-scale invasion of Ukraine. What's interesting is that the ruble is not only weakening against the dollar and the euro, but also against the yuan. Late on Wednesday, the Russian currency fell to almost 114 per US dollar and 120 per the euro, but has somewhat rebounded since Thursday trading. The sudden decline is linked to US sanctions on Gazprom Bank, which until recently was the only Russian financial institution able to convert rubles into Western currencies. What's more interesting is that the ruble also weakened significantly against the Chinese yuan, passing the 15 mark for the first time since 2022. While Russian officials, including Finance Minister Anton Siluanov, argue that the weaker ruble benefits exporters by enhancing price competitiveness and offsetting high domestic interest rates, it also makes imports, on which the Russian economy heavily relies on, more expensive. The steep drop against the yuan is particularly concerning as China recently became a critical trading partner for Russia. Despite market and geopolitical turmoil, Warsaw has managed to score Europe's biggest real estate deal of the year. Developer Ghelamco has signed an agreement with Swedish investment firm East9 for the sale of one of Warsaw's most modern skyscrapers.
This is Warsaw Unit, one of Warsaw's newest and most high-tech office buildings. Belgium-based developer Ghelamco has just sold the building, complete with full tenancy, to Swedish real estate investment firm East9. The value of the transaction? Just over 280 million euro, a European record for this year. Jarosław Zagórski, managing director of Ghelamco Poland, sees this sale as a milestone in commercial real estate's post-pandemic comeback.
The entire market has been waiting for this kind of transaction. I'm happy that it was concluded here in Warsaw. No one now has any doubts that this is one of the best markets in Europe in terms of commercial real estate.
How big is this sale? Well, to get some perspective, the total value of investments in office real estate in the first 3 quarters of this year was under €1 billion. So this sale alone accounts for over a quarter of the total. Ghelamco's not new to the Polish market. It's responsible for other Warsaw landmarks, such as the Warsaw Spire, which we see here, as well as the Warsaw Hub, which was recently purchased by Google. The 200-meter-tall Warsaw unit boasts nearly 60,000 square meters of leasable space, meets all ESG standards with WELL Core Platinum certification and an outstanding BREEAM rating. It comes fully leased with tenants such as Moderna, Warta, Stryker, and Amazon. As it's still very much a buyer's market for commercial real estate, East9 looks to have made a good deal here.
I'll put it this way. I think that the buyer, East9, whom I congratulate on the purchase, has made a fantastic transaction here.
East9, listed on the Nasdaq Stockholm exchange, is not new to the Polish market either. The company specializes in high-value properties in key locations in the Baltics and began operations in Poland in 2022 when it bought the Nowy Rynek complex in Poznań from developer Skanska. Ghelamco is currently working on another project just next door, slated to be the new headquarters of Santander Bank. And Ghelamco is not the only player with ambitious plans for the city of Warsaw.
The gap between French and German government bond yields has widened to its highest level since the European debt crisis. This, of course, worries economists around Europe as jitters in the French economy could be passed on to the Eurozone as a whole, threatening feeble recovery. The spread is a direct effect of the political turmoil over the new budget in Paris and the potential fall of Barnier's minority government. Despite a slight decline in recent weeks, the gap between French 10-year bond yields and those of its German counterpart surged to 90 basis points on Wednesday, a 12-year high, and stayed above 85 on Thursday. This worrying trend comes amidst political unrest driven by disputes over a budget proposal which includes 60 billion euros in spending cuts and tax hikes, raising fears of a government collapse. The proposed austerity measures come as France finds itself under the EU's excessive deficit procedure, with its deficit double the 3% GDP limit. And that's all for our business news updates today. For more business stories, check out tvpworld.com.